On the show today, Italy's ENI makes largest offshore discovery in Angola, MTN Group to expand local shareholding of its Ugandan unit, plus Egypt drives campaigns to stall rising car prices. Welcome to Business Incorporated. I'm Imana Amawe. That's the markets. Let's begin here in Africa. The markets across the continent showed rather negative sentiments at intraday. The Nigerian Stock Exchange shared about 0.25% of its all-share index as at intraday, and South Africa's JSE lost 0.11%, while the Egypt SE was down 0.53%. Kenya closed at a negative 0.44% on Wednesday. And in the Middle East, Abu Dhabi snapped back some of its losing streak from 10 previous consecutive sessions to add 3.39% at intraday, while the Dubai FM was pulled down by Dubai Islamic Bank's going ex-dividend to come in red at 0.99% at intraday. Qatar firmed at 2.14% at intraday, and the Saudi SE also gained 0.34% at intraday. And in Asia, the Pacific markets traded mixed today after data showed growth in China's industrial output level drops. The Nikkei 225 in Japan gave up its gains to finish flat at 21,287.02, while the Topix index fell 0.24% to 1,588.29. In South Korea, the Kospi wavered between the gains and losses to close up 0.34% at 2,155.68. Hong Kong's Hang Seng index was down 0.22% in afternoon trade. The Chinese mainland shares withdrew as Shanghai Composite fell 1.2% to 2,990.968, while the Shenzhen Composite tumbled 2.311%. And Australia's benchmark ASX 200 closed in the green, up 0.3% at 6,179.60. The U.S. stock index futures were also slightly lower earlier in the morning after market participants reacted cautiously to mixed economic data from China. As at 7 a.m. Eastern Time, the Dow Jones Industrial Average futures slipped 69 points, indicating a loss of more than 30 points at the open. The futures on the S&P 500 and Nasdaq 100 were also lower. The market focus largely followed economic development after data showed China's industrial output had expanded at its lowest rate in 17 years. The trade talks between Washington and Beijing also weighed on the market sentiment after President Donald Trump said he was in no rush to form an agreement. And now to some corporate news. MTN Group is looking to boost the local shareholding of its Ugandan unit to 20% from 4% this year. The move to expand the local ownership comes amidst pressure from Ugandan President Yoweri Museveni for MTN to list on the local bourse so that some of the firm's revenue can stay within the country. The South African telecoms giant's chief executive, Robert Shutter, says that the firm will engage in discussions with authorities over how to structure the extra stake sell-off. Meantime, just last month, Uganda had deported 4 MTN Uganda executives, accusing them of compromising national security. The firm has also been accused of under-declaring its revenues and causing public revenue losses. MTN has denied all the accusations. The World Bank plans to lend Angola $1 billion to fund social security and water projects, in addition to a $500 million loan agreed earlier, which Angola is set to receive this year. The country's treasury will now receive $1.5 billion from the World Bank over the next 3 years. The World Bank's support for Angola focuses mainly on water, agriculture, local development, social protection, solar energy, and transport. Angola, which is Africa's second-largest oil producer, has been pushed into an economic crisis by the fall in oil prices since the middle of 2014. And more stories coming out of Angola now. Italy's ENI has made a major oil discovery in that country. The latest find could boost the company's credentials as one of the most successful foreign oil producers in Africa in recent years. The find is Angola's largest offshore discovery in years and may help Africa's second biggest crude producer avoid a steep decline in output due to the aging of its other fields. ENI claims that the new Agogo prospect in Angola's deep waters contains about 450 million and 650 million barrels of light oil, with a potential for further upsides. The data from the exploration well also points to a production capacity of more than 20,000 barrels of oil per day. ENI, which has been in Angola since 1980, will be the operator at the field with a stake of 36.8%, the same as Angola's state-owned Sanangol, and SSI 15 Limited has 26.3% of the shares. Elsewhere, Egyptians are putting the brakes on new cars, that's on the purchases of new cars, in a bid to push for lower prices. A campaign calling on Egyptians to stop buying new cars to curb the price rises has dented the sales of automobiles. But the supporters of this move say that the values must fall further to lure cash-strapped customers back into the market.
With a population of more than 98 million, Egypt is potentially a huge market, though only a minority own cars. Most popular models cost 200,000 to 350,000 Egyptian pounds, almost 10 times the annual salary of an average government employee, making 3,000 pounds a month. The movement for cheaper vehicles began several years ago under the slogan, "Let it rust," an appeal to let vehicle rust in car dealership yards, as Egyptians hit by austerity struggle to make ends meet.
Car prices have skyrocketed without any particular necessity, and people still do not have the financial means to afford these prices, including middle-class citizens. Additionally, prices do not in any way match the capabilities of the cars being sold. There is also a huge gap between car prices in Egypt and car prices in Europe, something that essentially motivated this campaign.
Nationwide, car sales fell 42% month-on-month in January to 11,460 vehicles from 19,804 vehicles in December, according to data from the Automotive Marketing Information Council. January sales were up 10% year-on-year, but that is far below the average monthly year-on-year increase of 39.3% from 2017 to 2018.
There is no buying and selling like there used to be. The whole thing does not depend on price increase or decrease. I'm a guy who sells used cars, so what matters to me is stability. If the cars are expensive, then I'll sell with high price. If they are cheap, then I sell for cheap. But there is no stability now. Customers are staying at home. When prices go down, customers still wait, saying prices will get even cheaper. So no one is buying anymore, either new or used cars.